Have you taken a look at your index universal life insurance policy lately? And if you have you been surprised that the actual cash value is maybe lower and you may be actually coming close to the end of your policy because you're running out of cash in there? Let's take a look. What's up, everyone? I'm Courtney, the host of the Life and Transitions Experts YouTube channel and Facebook group. I'm also the owner and operator of Estate Pro Service, where we're helping families uh, through the biggest challenges and transitions in their life. I'd like to say that we help people find the peace of mind to know that they can live knowing that what they love is protected. And many ways that I do that is by helping people find their state regulated benefits and find out what they may be entitled to, find out what they may actually qualify for, and to take a look at what they may already have in place and see if it's actually what it's supposed to be. And that's what we're going to do today. Perhaps you've done the great thing, you have life insurance. In fact, you have an index universal life insurance policy. Now, if you don't know what that means, don't worry. We're going to take a look at it and go over it very briefly. Let me just click off my computer because it's going crazy. Something about a Xbox wants to play, but that's all right. We're not going to do that today. Let's go. Okay, so universal life. What is universal life? It's a permanent life policy, whole life policy that many people use because they want to not only provide that death benefit for their loved ones that they're wanting to protect when they pass, but they also maybe want to be a little more aggressive in the accumulation of the cash value inside. And some people use it as a strategy to be able to use for investing and other needs. So it's a pretty cool way to grow cash. Um, and it's an awesome strategy for you to use if it fits your investing portfolio, your investing taste. Now, when it comes to universal life, as you're paying, just like other whole life policies, when you're paying that premium once a month, your cash value begins to increase as less of the administration that you've paid for the policy decreases. The more money you put in, it begins to increase, and you're able to use those funds sometimes for loans or even for some cash surrenders where you get to pull the money out. Of course, not giving legal or financial advice. Definitely check with your CPAs, your financial advisors, and folks, or your insurance agent to see what's best for you. But just describing what universal life policies are. Now, there are different ways though that the cash value can start going down. That's if the cost of insurance, how much the insurer, based on their calculations, is devising that it costs to actually cover you when you do pass. Now, the way insurers actually make money is, they take the funds, the premiums that people are putting in each month, and quite often they'll use that and take that and invest that in other places, stock portfolios, things of that nature, so that they can generate funds. That's how they use the money. You give them the money, they go and play with it, or actually use it, invest, and receive more funds. They're not making money off your premium. They're making money off of using that money to make money. So at times, though, it can become where your premium is lower than the cost of insurance. And what they'll start to do is actually, well, let's take a look. What folks start to do. One, start to diminish the cash value. If the cost of insurance is more than the premium, they'll just start cutting in. The insurer will start cutting in and taking that out of the cash value that you accumulated. So you may think you have a lot. Matter of fact, I was just in the house 2 weeks ago with one of my uplines, AJ. We were sitting there with uh, where a person thought they had. Oh, actually, that was Ashley Keys. I was looking at Ashley Coley's work, and the person she was working with thought he had a lot he thought he had maybe, I think, 7,000 or something in cash value already accrued. Come to find out, he only had $400 left, and he was actually nearing the end of his cash value, and he was going to actually face lapsing in his policy if uh, if he if you didn't have the funds to come up with to cover the cost of insurance. So again, that's one thing that may happen. You may have a potential policy lapse if at the point the cost of insurance is higher than the premium and maybe you're not able to pay the premium. Because we'll take one pause here. One cool thing about cash, as cash accumulates, if you do miss a premium payment, sometimes they'll be able to take the money out of the cash value that's accrued to cover the premium. But if there's no cash value anymore because the cost of insurance has gone up so much that it's ate into it and zeroed that out, and you're not paying your premium, then there's potential for the policy to lapse. Number three, there may also be a reduction in death benefits if you need to adjust your death benefits so that you can lower the cost of insurance, which will impact the people that you're leaving this for. Number four, there may be some loan repayment implications if you have pulled the loan, if you did pull a loan out, um, and you're, of course, not able to adhere to that, to the terms of the loan, then that can get you in trouble. So you need to think about how the loan repayment is going to impact the policy. Please take a look and check if there's some reinstatement options. Just because your policy lapsed, quite often it 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 can be challenging to get it back there, but there may be some some reinstatement options that you're able to adhere to, particularly if you catch back up within a certain time frame. Almost every insurer has a time frame where you can catch back up, but after that, it becomes increasingly challenging. So make sure you stay on top of that, and make sure you're checking your premiums regularly, maybe once a month or once a quarter, every 3 months, once a year, whatever it is. Make sure you check on it regularly, because as your life situation changes, so perhaps it's your coverage, but also you want to make sure you know what's going on with the cost of insurance. Your insurance broker that or agent that you work with should be stepping in and doing this with you. So hopefully you have a really awesome person helping you. You may need to adjust the death benefit so that you can manage the actual premium more, because there's no point in paying insurance and not having it when you pass. The best insurance is the one that's in place when you pass away. All right. And of course, monitor the cash value. That's what you're doing when you're looking. You monitor the cash value and monitor the cost of insurance. And as always, consult with a professional advisor. There's so many awesome folks out there. If you need support with finding one or want to chat with me, feel free to reach out to me, Courtney at estateproservice.com. I love helping people in this space, and it's an awesome thing to do. That's what we do at the LITE, Life and Transitions Experts YouTube channel. And as we say, I'm heading off. LITE, let your light